All righty, guys. So today we have Tim Secor from Legacy Mutual here to give us an update with what's going on with the mortgages, loans, and the market right now. Tim was a former IT project manager who happened to fall into mortgages. He has been in the industry for over 9 years and has worked in operations, loss mitigation, as well as being a loan officer. So with that, we will get started. So Tim, thanks so much for being on here today.
Man, it's a good day. It's Friday, so I'm excited. I'm ready for the weekend.
I hear you. I hear you. All right. So can you start off by giving us a quick update with what is happening with forbearance and deferred payments right now?
Absolutely. It's more and more information is coming out about what's going on. So I felt it was a good idea to just let this information out. Obviously with the COVID pandemic, we didn't know what was going to be available to everybody, that were laid off or in furlough. And so it was a good idea to do the mortgage forbearance as an option. However, now we're at a point where we're starting to see what's happening. So I'll just share what we've seen so far. Obviously, if you're in a situation where it makes sense, where you may not be receiving income, it may make sense for you and your family to skip those payments, whether that's 6 months, 12 months. Usually it's a 6-month period that you're allowed to start off. And after 6 months, if you need an additional 6 months, that could be optional, depending on the servicer. Obviously, it's not a law that's set in place. It's just a suggestion, and each servicer has the opportunity to determine the guidelines or the rules that they're going to allow. So as I said, if it makes sense for your family, then do it by all means. However, there can be some potential setbacks to that. Obviously, the first part is that it is something that is going to end up on your credit. We are already starting to see it. It's not negatively affecting your score, your credit score. However, it is a situation where it is affecting the eligibility of certain people that may want to purchase or refinance. What has come out in the last week or so is that anyone who has requested a deferment or forbearance is not going to be allowed to refinance or purchase a home at least for 12 months. So they have to wait until the end of that period. So if they request 6 months, then a year after that 6 months has ended, then they will be able to purchase or refinance a home. So that's the first thing.
Good for people to know that, though.
Yeah, because unfortunately there are some situations where we're seeing that. Now, I know people are asking, well, what happens if maybe they request the information, they decide not to proceed? There's a possibility it still may end up on credit, or they may end up on what we call a STARS report. So it's a specific report that identifies people that may have requested something similar. It happened. It's a similar thing that happened back in 2008 when we had a ton of foreclosures. When the housing crisis kind of fell on its face, people that were asking for modifications or and then. So that report, if you end up on that report, even if you decided not to proceed, you could still potentially be denied to purchase or refinance a house. Because the way they look at it, if you are requesting that now, you're probably going to request it in the future. Does that make sense?
Yeah.
So
with that,
go ahead.
sorry.
No, go ahead.
So with that being said, are there alternatives or options right now for people that might find themselves in a very unfortunate situation?
Yeah, essentially, obviously, I mean, if you're not planning to refinance or buy in the next year, it can make sense to do that. But before I go into that, I do want to talk about some potential pitfalls that could happen with the forbearance, because I said the servicers. Oh, bless you. Bless you. You good?
Good.
So No, I needed that because it's a heavy subject. So,
Yeah.
the thing is that unfortunately, like, so I worked in loss mitigation before, which is essentially people that are losing their homes, that people that may have entered into a program like a modification program or something like this, and then could not, once that was done, they could not qualify to continue in the program based on what the mortgage servicer was doing. And so people were ending up in foreclosure, losing their homes. And so I know a little bit more of that side of things. So you have to understand that the mortgage servicers want their money, right? So let's say there's a situation where you have, an example would be, maybe you have a $2,000 monthly payment, and you say, I need 6 months of forbearance, right? So it's basically putting those payments on hold. Well, at the end of the 6 months, the servicer is going to request that you pay those 6 months back. That's $12,000. Anyone that has lost their job is not going to be able to afford that. So the options depend on each servicer. Some will say, okay, we'll defer them to the end of the loan, but that's going to be a rare situation, and it'll be a case-by-case study. Essentially, they're going to ask for your income documentation. They're going to look at your bank statement. It's similar to buying a house. The part about that is crazy is that they say, okay, well, if you can't pay it back now and they don't offer deferment, then they're going to want that paid back. So say that person, $2,000 payment, they owe $12,000. They say, okay, moving forward for the next year, you're going to pay an extra $1,000 a month, or maybe they extend it out longer. It depends. Maybe it's 2 years, right? But still, that's an extra $500 a month on top of your current mortgage. The problem is, if you are not able to pay that, you cannot afford it, then you could see yourself entering in foreclosure. So you want to make certain that if you can afford the payment, to make the payment. Obviously, you're not required to. Just know what could happen after that period has ended. So if the call center that you're talking to, because these are not people that they're reading from a script. Most of them are not well versed on what's going to happen on the back end. They just know what has been told to them. I mean, they may have just started the week before and are just reading from a script and what the options are, possibly. So they may not know the full extent of it. So you want to make sure that you weigh all options possible before you enter into that program.
So with that being said, is refinancing a better route? Is there ever, I know this is a little bit of a weird thing to ask, but also, are there any alternatives to ever work with your lender or provider to I don't know.
No, there is. I have some clients right now that are refinancing simply because rates are low. They are, with great credit. Obviously, you could see yourself in the 3s. Some people are in the 4s, which is still historically not a bad rate at all. Anything under 5%, I mean, good Lord, that's amazing. Historically, specifically. Refinancing. There's the option of, like I just refinanced someone that they ended up skipping 2 months of payments, and their payment was about $2,500 a month. That's a $5,000 swing. Obviously, we did wrap in closing costs and a new escrow account, so they came out of pocket less than $100, and then they got a refund for their current escrow account like 4 weeks later, roughly. So they swung $5,000. They got money back for their escrow account, which is a couple extra $2,000 to $3,000, I believe, and then they saved $150 to $200 a month. So now that's on a case-by-case situation. That's not for everybody. Not everybody has that. Obviously you have to have equity in the house. You have to have no credit concerns. And the other part of it is employment. The one downside, or not downside, but the one setback that could happen is that if you are currently on furlough or have been laid off, unfortunately, you do have to start back to work before you can enter into a refinance. So it for those that may need the money now, it does put them in a difficult situation if they're not working at this moment.
So, and I don't mean to put you on the spot with this
No,
question.
please.
So, because this is a really challenging time for so many people and so many hardworking people that,
Yeah,
this has hit a lot of people pretty hard. So if
absolutely.
there is a situation where, let's say, an individual has lost their job
Mhm.
and they're faced with their mortgage, what do you recommend that they do, or at least what type of conversations do you think they should be having with?
Yeah. So obviously get knowledge about it. Get information, as much information as you can. If you have, if you trust your lender, obviously call them specifically and just be like, hey, I need information about this. I need to know, do I qualify? If they're not working, like some servicers will, there may be an option. I don't know, other than the forbearance. But to be honest, if you are saying, hey, I'm laid off, I know that the thing that they usually do is they forward you to that department, and they're going to say, hey, we're going to offer forbearance, deferment, anything like that. If someone is working, then obviously, call somebody, that, a lender like myself, to ask questions. I mean, the more information you have, the better you are.
Right.
This is something that's not taught in schools. It's not, most parents have no clue how to talk about a mortgage. My own dad was like, God love him, but he's just like, I don't know, go talk to a bank,
Right.
and it's, until I got in the industry, I really didn't know what I was doing. So I always tell people it's not my job to sell you, it's my job to educate you. So it's, call your lender, call me, let me know if you have specific questions. That's my job. So for those that may not be working and they don't want to enter in deferment or forbearance, my suggestion is to make your payment if you can, and then get through whatever you can, like beg, steal, no, don't steal.
Yeah,
Beg
don't
or
do that.
borrow.
Don't do
Yeah, don't steal. Beg or borrow just to make that payment. Simply because, and then after the fact, like once you start back to work, refinance to give yourself a break. Like I said, we can save 2 months, in the best case scenario, at least 1 month we can skip, but possibly 2 if we close you on the right time. It just, if you need the savings, a refinance, might be a great option
Yeah.
or after you start back to work.
No, I agree. And there are options. And,
Yes.
I don't mean to put you again on the spot, but you also never know when
Yeah.
you call what there could be, a possibility. So really, for anyone that's watching this and might be in a tough situation,
Yeah.
what I'm hearing is at least pick up the phone and make the call. And there probably are, and I'm asking this off the top of my head, is there are ways to go about maybe pulling another loan to pay that loan, or moving some things around.
Right.
Is that a correct, or do you not recommend that?
Yeah, I know. I mean, I don't, I'm kind of a person that doesn't like debt, but
Yeah,
I mean,
no, I
obviously if
agree.
you have credit cards and you can, float that payment on a credit card, and then pay it off later after you refinance or something. If that's a possibility, then, I definitely, I'd suggest that rather than missing a payment.
Yeah.
Yeah, there are options. I think the thing is, when it comes to mortgages, there's this fear already. Like I'll talk to people all the time. They're just afraid from the first call, because it's like, oh gosh, it's a mortgage, it's finance. It's like I don't want anybody to know about things, and so people will hold off, and they won't call, they won't They don't want to ask questions and sound stupid, but that's, in reality, that's 90-something% of the, the population has no idea about mortgages.
Right.
So it's okay. Like, you're in the same boat as most people. So don't be embarrassed or afraid to call, because the sooner you take care of it, the more knowledge you have, the better off you're going to be. The better chance you have of making a wise decision for you and your family.
I agree. And, just to follow up with that, I think, again, anyone who is watching this that is in a tough situation, not to be embarrassed, not to feel bad. So many people have been hit so hard with this, people
Yeah.
that never thought they would be in this situation. So, Tim and I are both in Texas, and it has just been phenomenal to see what some local churches are doing right now with food,
Yes.
and if I can just take this moment for anyone that is like even afraid to ask for food or anything.
Yes.
Make that call to your lender, make that call to your church, make that call to your neighbor. This is a tough time for everyone.
Absolutely.
And no one should be embarrassed to ask right now. So,
right. Yeah, and there's plenty of help out there right now. I mean, you hear about so many people just reaching out. Like Guy Fieri right now is helping out restaurants. He's raised like $20 million to help those in the restaurant industry. And there's other things out there that are, it's just like, hey, if you're part of, this workforce, or you're, in it, somebody that can't make your payments, you just have to reach out. You just have to find it. You have to ask.
I agree.
There are resources out there if you need it. So you just have to take a moment to try to find it. So
Yeah, no, definitely.
Yeah.
And then, so anyone who is looking to refinance right now,
Yeah.
who's this, who would you recommend refinancing their home?
I don't me. Yeah, I'd be more than happy to, just have a conversation. It's not a sales call. It's just somebody saying, hey, does it make sense? And I'll say, okay, give me a copy of your mortgage statement. Let me see the numbers. I'll figure out, just ask, hey, where's your credit? I'll ask, what's your house worth? It's just kind of a mortgage checkup, where I say, okay, let's see where you are, and then if it makes sense, then we can go through a full application, whether that's on the phone, online. I have an online application for those that might not have a lot of time on their hands. But yeah, it'll just, I'd be more than happy to help anybody out that needs it. So
awesome.
yeah.
So thank you for that. And when is now a good time to buy a home?
Yeah. Rates, like I said, rates are at an all-time low. There was some craziness in the market for a while, when everybody kind of, like, a little over almost 2 months ago, everybody kind of started refinancing. A lot of people didn't take advantage of it. A lot of people were kicking tires, thinking it was going to drop down. Is it going to go in the twos? Yeah, it's probably not. Maybe next year if things continue, but right now is a great time to buy. So what we can do is, there's not a ton of inventory right now in the market, but if you have the opportunity, then it's a great time to buy. Essentially, it's, rates are low. You might as well, right?
Yeah. No, I mean, there's got to be, some good news, and there's always hope. And this could just be, the little light that's going to grow. And it will. We are going to get through this.
Yes.
And, so someone that, now if you do have the funds, it is a good time to buy, because you're going to get locked into a pretty low rate. So, yeah, if you can, you should.
Yes, absolutely. Absolutely.
Definitely. And then, have you found, through all of this, are you doing anything more or less of, or is there anything in particular you're doing to serve your clients right now?
The biggest thing right now is just, more than anything, it's just answering a lot of questions. A large portion of my day is just talking to clients about the forbearance or deferment. Past clients will call me and say, hey, what do you think about this? Should I do that? Should I not? Like, what are some of the potential issues? talking to more people about refinancing. Does it make sense to refinance? There's a lot of those questions that are taking place right now. So it's more than normal. So,
Yeah.
and I just try to answer as many questions as I can. Granted, that's, part of, my nature anyways, just to kind of educate. But I think more so than that, it's just making myself available, even if it's after hours on the weekends. Obviously, it's not ideal, having a family and such, but it's necessary at times.
Right.
So I just try to make myself available to my clients, based on what their needs are. So
That's awesome. So how can you be reached?
nice segue. So obviously email tim.secor@legacymutual.com. That's tim.secor at legacymutual.com. You can call me on my office line, 972-294-5251, or my cell at 501-733-4984, or just, I don't know, is that backwards or is that forward?
No, that's forwards.
Okay.
That's right. I think that's right. Yeah, that's right.
Okay, you can read it. It does it. Okay, yeah, that's my card. So for those that, if I spoke too quickly or whatever.
No, this has been great, Tim, and
Good.
yeah, I really appreciate you coming on for this. And to anyone out there that's listening or watching this, I just encourage you to not be afraid to make that call. So
Yes.
yeah. Well,
Good.
thank you, Tim.
You're welcome. That's what
And
I'm
I
here
hope
for.
you have a wonderful weekend.
Me too. Yeah, we're gonna get out, so may actually go visit people. So now that things are opening up.
I know. Thank God. 6 feet away.
Yeah, 6 feet. 6
Yeah.
feet. Yeah.
Well, thank you so much, Tim.
You're welcome. Thank you. I appreciate it.